G'day folks, welcome back to Pete's Investing. It's March 1st, 2024. This is the iron ore technical analysis. Now we've just hit a new bearish momentum on the weekly chart, and we've got some support levels to look out for, some bearish and support levels. We're also including a indicator we've introduced recently, which helps identify tops and bottoms. Plus we'll include a trading idea for your reference if you're interested. In terms of news on iron ore, it's held a 4-month low on high China inventories, slow construction, and this article discusses the current low iron ore price attributing to high inventories in China and slow construction activity due to unfavourable weather. BHP Billiton posts lower net profit for the first half of 23-24, targets higher iron ore output. This news reports on BHP's lower net profit and their plans to increase iron ore production in the future, and iron ore price to rebound in the second half 2024 despite near-term headwinds, according to Fitz Solutions. And this article shares the prediction by them that the iron ore price will rebound in the second half of 2024 despite current challenges. First, on the weekly chart for iron ore, you can see here the ADX has had a fresh bearish breakout, as the CCI 150 is also broken below its moving averages, and you can see there's been a bit of a pullback on the price after making some recent highs. Just back here, we do track divergence. This is a bearish divergence back here versus higher highs in the price, and the price fell off quite substantially. So we do track those. There's currently no divergence on the CCI and the price on the weekly. On the daily, the ADX is showing a bearish output. The CCI 150 had a bearish divergence back here versus higher highs in the price, and the price did fall off, and that is still declining, and it's hit this minor support area at 836. So we'll keep an eye and see if it's going to bounce from there. Now, in terms of Fibonacci retracements, there's a couple of areas we can draw it from. That recent low, you can see that it's broken below the 61%. If you draw it below there, and that's actually bearish for that little range. However, if we drew it back to that recent low, you can see there it's currently sitting on that support level, and that's key. So it's either going to bounce from there, or if it breaks much lower, we're going to see further declines, obviously, in line with this short-term chart on the daily. On the hourly, it's broken up to a fresh bullish breakout on the ADX. The CCI 150 has had a bullish divergence versus lower lows on the price. The price consolidated there for a number of hours. And again, I've got these arrows here, these bullish blue arrows in green, and also these red bearish arrows which indicate a downturn, and that's also an indicator of developed recently, which helps identify tops and bottoms. So you can find that in the description below for that video. But you can see there we may see a bit of a bounce from here. There's no guarantee, of course, and no guarantees ever in any part of the trading, but just all about probability. So at the moment, that's where we are with that. In terms of a trading idea and where we are today with iron ore, this is the daily chart, and we've got two hourly charts on the right here. This one in green is the average down approach, and this one is the stop loss approach. So what we're looking at basically is, I've drawn the parameters had you gone short and long respectively for each of these. So had you gone short back here more recently, you can see there when the CCI drops on the daily, when it drops below the band of moving averages. So you don't trade when it's within the band, like you don't trade in that area or that area. So when it drops below the band, you go short, and you can see there on the two right hand charts, the hour charts, you would have gone short during that period there, and you would have stopped it out possibly when it touched that band. Now in this case you would have maybe left that trade go on the average down approach, but you can see there, had you let it go through the whole period going short, that generated $50 overall for the shorts on the average down approach, and would have generated, and currently still in the short trade, you would have generated $2 on the stop loss approach. Going along back here, when it breaks above the moving average band on the daily, you can see there, and you would have stopped it out before it broke into this band down there. So you would have made one trade going long on both the average down. You would have made about $4 or $5 on that one, versus the same about $4. So you would have made the same positions going long. And again, don't trade when it enters these band of moving averages, and obviously don't trade when it's going in the opposite direction. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules, So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.